Hi everyone and welcome back to today's morning report with me, Richard Perry, market analyst at Hantech Markets. For Monday the 19th of May, the chart I'm going to look at now is sterling dollar. And as with the euro, you've seen this little bit of a recovery in the last couple of days for sterling. That's pulled the dollar index lower, as I spoke about earlier in the main report. But certainly we're now seeing a bit of fight back from the correction that we'd seen, but ultimately this is still a very strong chart. If you go back, you've still got all these key lows that come in around the 89-day moving average, which is 66.54 at the moment. But I'll talk about that later because that's an interesting thing in itself. But you don't really get a really strong gauge of the possibility of the further correction on this daily chart, because these to be honest, the daily chart is fairly strong still. However, you would still argue that the RSI has not really yet recovered back into any sort of bullish near-term outlook, because you've still trading around that 50 mark, which is interesting. But on the intraday chart, I think you see a bit more. If you zoom out slightly here, you've got this big top pattern that's been formed here on that move below 68.30, which is basically where the neckline, comes in, around that 68.30 mark, and it's basically where Friday's rally hit. So that is now the big area of resistance near term, and certainly now with that in place, you would be arguing whether this is now a chance to sell. You've also got these momentum indicators that are beginning to turn lower again. Notice on here you've got this top formation on the RSI, which is possibly now breaking lower, and also the MACD lines are breaking lower. You've also got this top pattern again on the stochastics as well. So this would suggest that perhaps if there were to be a failure of the overnight low at around 68 big figure, that could signal a resumption of the selling pressure, and ultimately then a retest of that 67.29, but also this top pattern that gives us an implied target of 66.50, which interestingly enough, as I said on the daily chart, is around about where that rising 89-day moving average is, which has tended to be used as the basis of support for the big corrections. So there are a couple of things that still suggesting that maybe we're getting some pressure back towards that 66.5 area, which I think could be seen in due course. But obviously that 89-day moving average will be rising, but there is also a band of support that comes in around about that 66.80 mark as well. So a couple of few factors that suggest that perhaps this recovery that we've seen in the last couple of days on sterling could well start to fall over again, and further pressure to the downside may be seen near term, before we reassess what the medium to longer term outlook will be. So that is an interesting thing that I'm looking at the moment on cable. Anyway, I wish you good luck in your trading on cable today, and I will speak to you later. Thank you.